All right, guys, listen, the urgent real-time big picture stock market TA forecast. This is my target. It looks atrocious. The target is actually here, and you want to timestamp these, screen capture these, 48.55 or 43.15. It's not going to be between these two as the bottom target for the stock market. It's going to be this or this. And that means we're going to fall this far, which is lower than the last insanely let's just jump off the top of our building low from this. Why? I'll show you. This is my big picture thesis. Take a look. We have over-unders. We have two overs, one here and one here. Perfect two overs. And we have one under right in here with a rejection up here. So that creates structural leverage from the bottom and the top and the top. So that means we're going to have one more pattern-wise. Normally these things, the confluences generally conflue, okay? So we're looking at retouching this line. I know you can barely see it. I didn't make it thick enough, but I don't have time to adjust it for visual reference. Anyway, so normally if you have one touch from the bottom, and then one rejection, and then one touch from the top, and two touch from second touch from the top, you normally get an attempt at a third touch from the top, which means this is going to be a catastrophic drop. In retrospect, relatively, I'm going to show you what it looked like during the COVID. All right, so top to bottom, this means that this drop would be 37%, 30, almost 40% drop on the stock markets. 40% drop on the stock markets, that's like nuclear catastrophe level. Yeah, 40. Almost 40%. We have 37% profit. I'm zooming in once again. Now, relatively, let me show you what it did during COVID. So here's the same thing all scrunched up. You see 2 points, and then a third attempt is what I'm expecting to go from boop, 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 boop. Guess what? During COVID, this is what it looked like. And during COVID, we had the, what? Wait. 1 point up, it's tiny. You can't even see it because of the magnification. 2 points down, 1, 2, and then a third attempt. No way. We have a broadening wedge. We have a megaphone. We have a triangle here. Look at that triangle. Lesbians are going to love this. Look at this. Triangle. Triangle. It's the same thing. So I'm expecting about a 37% drop here, this red line. Guess, but COVID wasn't that serious, was it? Let's see. COVID, this is the top of the COVID dump. What was it? No, you got to be kidding me. That can't. Does history really rhyme? Look at that, 36.7, 37%, just about the same. Just about the same. So is this a fractal? You know, I don't like fractals. All I know is that in this case, this is going to dump this much. In this case, it dumped this much. This is coincidental. This is just a coincidental. This happened, so this has got to happen. No. I mean, you could have this happen and then something totally different happen here. But let's zoom in to see whether... So this is my theory as to what's going to happen. We're going to hit the bottom of this triangle. And so what we have to do now is see if what's happening so far supports that theory. We have to plot a big picture path and then see if the small picture steps that we're taking, the footsteps that we're taking, actually align with that big picture path. So what we got to do is zoom right back into this mess to see what's happening. I'm going to zoom in. You know what? I'm going to show you me zooming in. Let's do that so that you can stay current and relative, so you can see exactly where we are in the big picture of things. You know what? Let's stay right here for a second. Let's zoom into just this part for now and show you. I can't zoom out to show you back where we were, so you might want to play this in reverse. Oh, that's right. Modern video players don't let you play anything in reverse. Okay, so look. We have this huge trend. We have this entire big trend here. See this line that goes boop, 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 boop. This is almost a perfect head and shoulders, but it's not. Left shoulder is too small. So this kind of replaces this left shoulder. You know, I'm not going to give you a whole dissertation on the theory of head and shoulders and channels, but suffice it to say that when you have 1 attempt, 2 attempts, 3 attempts, 4 attempts, 5 attempts, 6 attempts at breaking a trend, it eventually breaks. It really does break. It either happens in multiples of 3 or, no, it either happens in 3 or multiples of 3. In this case, we have one previous touch back here that's off the channel, off the screen. So 1, 2, 3, and then 1, 2, 3. So this would be a multiple of 3. This is 6 attempts. I don't have 6 fingers, but if I did, I would have one other finger here. 6 attempts is where it breaks. And in fact, on the 6th attempt, it did break. But then now we're playing across this neckline. Normally, that doesn't happen. Normally, when something breaks, it just gets catastrophic all of a sudden, unless the whales are intentionally trying to lengthen distribution as long as they can, to distribute as slowly as possible so that they can get the best price for the longest period of time. In which case, you get a pattern like this, where you go indecisive, under neckline, and then bounce back. Under neckline, and then bounce back. Under neckline, and then bounce back. Normally, you don't have more than 3 bounce backs. You normally don't have this is a bull trap, this is a bull trap, this is a bull trap. You normally don't have 4 bull traps. This also only happens in sets of 3s or multiples of 3s. So I'm expecting this to go down. So let's see if it really is going to go down. And this, remember, this is the big picture line that I drew. That'll take us all the way down to 37% dump. Wow. Remember these things? Okay. Is this going to happen? Let's take a look. As we zoom into, remember, you have to have a big picture theory and then see if the small picture footsteps are aligned with that big picture theory. So let's zoom in here now. Right in here, I'm going to zoom in while you see this so you can stay visually relative so you don't lose your place mentally as to where are we now? We're in the 5-minute candles now. I'm going to zoom into this. Okay, 5-minute candles. I'm going to move my head so you can see this. This was that big long neckline. Remember, we had the 3 dips, 2 sets of 3, so 6 attempts. This is the 6th attempt, and bull trap, bull trap. Is this going to be a bull trap, though? Is this going to be a bull trap? And if you're smart, you're going to notice something. If you're smart, let me thicken these lines. You got it, Sherlock. We've got a descending broadening wedge. We've got another V in here. So we had a huge V here, and then now we have a small V here. But this particular V isn't an equal V. It's not an ascending V. It's a descending V. So all the highs are lower high, lower high, lower. What? Is this the lower high? If I had shown you this yesterday, anyway, it would have been a lower high. But today, it's not a lower high. Oh, man, I need to be trading this right now. I don't have time to make this video. If you know anything about accumulation and distribution, when you have a V going downwards, slightly downwards, with the highs and the lows going lower and the lower, normally that's bullish. Normally that's bullish. Same thing. If you have a zone that looks like this, where the highs are getting higher, but the lows may or may not, or both the lows and the highs are going higher like this, that is bearish. That is a distribution zone where the whales are dumping as fast as they can, while the stupid retail guys are just getting trapped, buying up while the whales are dumping. In this case, this is down, so that means we're bullish, right? We're going to continue. We're going to continue upwards. Yay! We're not going to actually dump like Uncle BFM says. Uncle BFM thinks we're going to dump 37% and just do this deadly thing. But since this is a downward megaphone, this is a descending megaphone, it's a continuation symbol, isn't it? No. What? So all the textbooks are wrong? No. Your analysis of this thing being this thing is wrong. What does that even mean? Look. Whenever you have a downward, there's all these caveats. It's like the law. It's like, well, this is jaywalking, yeah, but they're handicapped. Well, they were handicapped, and then, but this was like between the hours of 6:30 and 7:30. The handicapped people should walk unless there's a handicap. Like, there's all these caveats, right? So here's a caveat for this particular descending broadening wedge rule. What the bottom of the 1, 2, 3, the third leg up, so this is the first leg up, second leg up, third leg up, what the bottom of the third leg up should look like, it should look like an accumulation zone. An accumulation zone looks like this. Whales are like, you know what, it's going to just keep pumping for years and years and years. We're going to have a mega pump on top of a mega pump until midterms for Donald Trumpy. So what you should see is whales suppressing price, suppressing price, suppressing price, and it just stays down here really, really long. It kind of goes up and then it just goes right back down again, and then it does this again, it does this, and then finally at the very end, after the whales are done accumulating, suddenly they do their media play, and then they send their spam bots out and just tell everyone everything's bullish, and then bam! This is actually what an accumulation zone would look like if this was a valid. Notice how you have head and shoulders that are invalid, you have falling wedges that are invalid, rising wedges that are invalid, channels that are invalid. This is a invalid descending broadening wedge because there was no accumulation zone. What this is retail saying, hey, there's a dip. Every single dip goes up, so let's just buy this dip, and it goes up, and then it kind of consolidates here. What's this consolidation going? It's rich people taking profits, whales, banks taking profits, and then the retail's like, hey, there's a tiny little dip here, let's buy that one, and then poof, and the bank's like, holy shit, I guess we don't have to hold until the next bull market, let's sell some more. And then they sold some more, and then retesting, and then there's still retail borrowing money from their great aunt. Bam! What does this make? This is a stair step. What did they say about stairs up? Elevator down, or cliff diving down. So this is a 3 drive. This is a harmonic pattern that shows the 3 drive. This should go down. Now, having said that, let's compare with other factors. This was the top, way up here. This was the absolute top. Actually, you know what? I'm not going to zoom back out and show you more. Anyway, this is the top. The way retests of tops generally work is that you have a lower high, and then you have a lower high, and then you have a stop out bull trap that's higher than the second lower high. So this is the high, this is the first lower high, this is the second lower high, and then this should be higher than the second, I should have labeled the second lower high. First lower high, second lower high, and then you should have a high that gets bigger and higher than the second lower high, but lower than the first lower high. So basically what I'm saying is, if we were to zoom out, and if we were to draw a purple line, let's actually, I'm going to undo this one. I'm going to undo this, okay. Undo. Why isn't this? Okay, there it is. Man, my graphics card is super slow. And it's a, oh shit. It's a, maybe it's an AMD. Man, I don't know why anyone would buy stock from a female CEO. They all suck unless they're selling like polyester cancer-causing leotards. Okay, let's look at the highs. Let's look at the highs. So this is the first lower high and then the second lower high. If we were to draw a thin purple line at this point, and if we were to draw a thin purple line at this point, oh look, somebody had the foresight to do that. What would happen is that the third attempt going up should end up higher than this, but lower than this. You ready to follow this? Third attempt. Oh my God. Oh my God. Are you kidding me? I mean, this is exactly what's happening. This, well, there's 3 purple lines, but ignore this top purple line. I should erase this. But anyway, this line and this line is the only thing you're worried about. We came up right in between these 2 purple lines. So that means we should reverse right now. You are witnessing the absolute pico top of this particular thrust. So let me put a time price marker. Pico nano top, nano micro pico top of this particular thrust. If my theory is right, and this is an invalid, which everything's telling me this is an invalid descending broadening wedge. So 6798. 6798 was the absolute top on the S&P 500 for this particular dump, okay? Or for this particular retest of the highs, because we invalidated the second lower high. And now this easily will trap most people. Most people will get trapped right here because they see a descending broadening wedge and they go, oh, let's grok descending broadening wedge. And grok will tell you, or Grokopedia will tell you descending broadening wedges are traditionally continuation patterns and they're bullish. So people are going to buy right here. This has been confirmed as a descending broadening wedge. Except, like I said, it's unreliable because there was no accumulation zone down here for the rich people. Okay. Now, what we have to do is, since we've analyzed this particular chart, so I think we're going to go down here. If we get invalidated and we don't do the big lesbian V thing at the bottom and go 37% down, then what we're going to do is we're going to double bottom here. If we double bottom here, it is as though we had an accumulation zone, because this would be an accumulation zone and another accumulation zone within the same, I can't do parallel lines with my fingers. I guess this like this, within the same zone. If within the same zone, we have another bottom here, then we can go up without actually hitting my 37% down massive death thing. So now what we have to do is look for macro trends that support this particular analysis to see whether we have any cross correlations, okay? What we know is that when stocks pump, so I'm thinking we're going to dump, right? So what we know is that when this thing dumps, treasuries have to go up because people are going to move their money into cash. And then once they have cash, they want something that produces interest on their cash. And what does that? Treasuries go up. If treasuries go up, what does that mean for the... that means that concurrently, Japanese interest rates also has to go up, because then Japan will the Japan carry trade will get destroyed. Now, if I talk about the Japan carry trade, that'll take me another hour. So let's not do that. Let's just look at the charts for the Japan treasuries, which indicates interest rates for Japan. Now, this is the simplest part that you have to remember about Japan carry trade. If interest rates go up in Japan, stocks in America go down. Why? Because Japan has like a 2% interest rate or something stupid like that. Japan has it's a 1.8% interest rate. It's super stupid low. America's interest rate is like 7%, 8%, 10% or something stupidly high. Korea's at about 4%. So everyone borrows money from Japan. All the banks, all the fund managers, all the billionaires borrow money from Japan to buy stocks in America. They just do. Okay? So is the Japan carry trade a tiny little point sample thing that doesn't really matter and it's just used by very few people? No, it's used by everybody because it's the only cheap form of money borrowing in the world. And this is what Japan's doing right now. Ta-da! Look at this. Japan is printing, what they're trying to do is print a parabola going straight effing up. Look at that. This is just constantly. They had a accumulation zone here, and then a pump, and then this is just going to keep going up. This is just going to keep going up. And Japan's interest rate was 1.4%. Now it's all the way up to almost 2%. You might think 1.4 to 2%, not a big deal. When it comes to Japanese 10-year treasury bonds, it is a big deal. Okay, just remember that. Again, I'm not going to go into the fine details, but if this thing goes up, this thing goes down. And guess what? This thing is currently in the process of going up. I would zoom in to show you more of the features as to why this thing is going to continue to go up, but I'm not going to do that. That'd take me another 30 minutes. So let's go into the U.S. Market. U.S. market is the same thing. The U.S. Treasuries 10-year has a descending falling wedge. And we had a breakout, and guess what? We have a retest. But wait, there's a purple line. Remember we had a purple line here, and then we confirmed that we're right in between these two purple lines. Higher than the second lower high, but not higher than the first lower high, which replaces this as second place, and this becomes first place. Okay, right in between these two purple lines. Let's just see what happened with treasuries. Wait, no, are you kidding me? Look at that. Look at what happened with US treasuries. So during this particular failed breakout attempt and retest of the lows, this is the lowest low, the second lowest low. This is the lowest low, obviously, because it's a double bottom. You can see the tweezer bottom right here. We got a brand new lower low. This was the lowest low. We got a brand new lower low. And now we're above it. That's just how it happens. You just end up breaking the lower low until everyone goes, oh no, we're lower than this. We'd better, treasuries are going to dump. Let's sell treasuries. No, you need to be buying treasuries right here and then dumping. So this is always a trap. By how many pixels? Look at that. Look at the number of pixels. You can count. This is a super high definition monitor. There's like 7 pixels is how low this thing broke under the purple line. This is the purple line. This is what we're looking for. Look at that. Just tiny little thing that just broke right underneath. Anyway, so what that means is, oh, look, is this the left shoulder? This could be the right shoulder. Yeah, what's going to happen is this. Ta-da. I don't know why I have gaps here. This is stupid. My mouse is, oh, I know why. Look, it's because my mouse is out of batteries. Yay, that's why it's all being weird. Okay. This is going to be there's a W here. Just imagine a inverse head and shoulders right here with left shoulder, left shoulder, head, right shoulder, inverse head and shoulders. It's going to go right back up. And as treasuries go up and interest rates go up, stocks are going to have to dump. So remember at the beginning of this 30-minute long dissertation, I said this would be the Pico top. We still haven't gone above that particular price. You remember I said that I really should be trading this instead of doing this video. I'm going to need to short this right now. And interest rates are in fact poised to go up, which is going to bring stocks come crashing down. We have to revisit right here. This is where this is a critical juncture point. If we lose this double bottom, we are going to hit my 37% dump point. If we kind of consolidate here and it looks like it's going to it's an accumulation instead of continued distribution, then my original 37% dump is invalidated, and we're just going to continue up and actually do a legitimate reversal. So this becomes a illegitimate descending megaphone. So then we're going to become a legitimate some other accumulation geometric. Okay. Oh my God. So what else do I have to explain? You know what? I'm not going to explain anything else to you. I'm going to do this trade and go short for my clients. If you want to be a client, just contact me, DM me. I can't take many clients because I'm the only one that does accounting. And I'm, as of late, late on accounting for most of my clients because I don't trust anyone else to look at my books and do my books for my clients. You can DM me on Twitter, Bitcoin Fund MGR, BitcoinFundMGR on Twitter.